Welcome back. This morning was reported the Philly Fed Index was reported a level of 18 for the month of August. The Philly Fed, which is the future capital expenditures, reported by the Federal Reserve Bank District 3 in Philadelphia, forecast the capital expenditures over the next 6 months, specifically relating to the manufacturing sector. It basically estimates the relative level of general business conditions in Philadelphia. Readings above zero are considered improving conditions. Those below zero indicate worsening conditions. And the data is derived from a survey of approximately 250 manufacturers in the Philadelphia area. Now, taking a look below, we can see that the Philly Fed number had a long-term trend to the downside, which has now reversed course, at least for the time being. This represents a sharp reversal in over the past year or so. Now, taking a look specifically at the statistics, we see here today's level is a number of 18, which does show us a pretty big change from the prior month of 4.4, and before that 11.7 and 9.6. In fact, the highest reading is 31.1. This goes back to November of last year, but today's report does represent the highest reading over the past 4 months or so. Now, taking a look at greater detail, we can see here the Philly Fed all the way to the right-hand side did show us the biggest rate of increase, around 300%, after a long trend to the downside. And this is the biggest rate of increase that we've seen actually in quite a while. Now, there are some interesting correlations that exist within the Philly Fed. Specifically, we'll see with inflation and housing data. Now, here's a Philly Fed manufacturing index, has a 78% negative correlation to the home price index. It has a 79% negative correlation to the consumer price index and to the personal consumption expenditure, another inflation index, a 76% negative correlation. Now, negative correlations occur when one market or data set is moving up and the other is moving down. A 100% negative correlation would be a perfect opposite relationship. When one goes up, the other goes down. Correlations in the 70s is pretty strong and does indicate a strong relationship, in this case, in opposite directions. Now, we took a look at the Philly manufacturing outlook. Compare that, for example, to existing home sales. Existing home sales are shown in the red, and the Philly index is in the blue. We can see an overall trend to the downside in the existing homes, and this shows us a sharp reversal. Now, compare that, for example, to the inflation data, consumer price index. Consumer price index in this case is shown with a line to the upside, the red line to the upside, and the Philly Fed overall is trending lower. However, today's report again shows us a sharp reversal back to the upside. You can also compare the Philly Fed to the personal consumption expenditure, which again is trending over long term to the upside as the Philly Fed moves lower. However, today's report does suggest a possible reversal in manufacturing conditions to the better in the Philly area. If that is the case, perhaps we could see a reversal in inflation numbers back to the downside. If this is not the case, then perhaps future Philly Fed numbers will represent more legs to the downside. Hope this has been helpful. Talk to you again soon.